Well, good evening, traders. Let's go ahead and get started. Thanks for showing up. I'm Dean Jenkins, founder of followmetrades.com, and the purpose of this session is it's really for you to answer any questions you might have about my stock and option pick service. So I'm going to walk through my method that I use to pick stocks and then how I communicate that, how the service works. But please, ask questions as we go along, and the more interactive it is, I think the more value you get out of it. What I'm going to do is I'm going to show you a couple charts and explain the basics of my method for picking stocks. I'm going to show you how I record them, the results that we're getting, and then my website and the tools that I have there to communicate to you. And then again, answer any questions that you might have. So I was expecting a small group. I was hoping this would be just a handful of folks, and make it kind of a informal chat session. And we have kind of a small group, and that's good. That's good. I'll be able to get to any of the questions that you have, for sure. All right. So let me switch over and show you a chart here first. And you guys see that question thing okay on the GoToWebinar control panel? Just want to make sure you can type it in if you do have any questions. Okay. So I'm showing a chart here, and I'm just going to walk through the basic analysis techniques that I use. And I said in the invitation here that I would give you one of my current favorite picks. And so this is one of them right here. This is a symbol AXP, American Express. So in my analysis and in my trading, I use Elliott wave and I use Ichimoku cloud together, along with some other fundamental or rather technical analysis tools. But those are the two major systems. And I like to say when East meets West, profits explode, because we got two independent trading systems, Elliott wave and Ichimoku cloud, agreeing on a trend and a trend direction and a change in trend. That is really powerful. So I don't know if you're familiar with Elliott wave analysis. I use a very simple, very repeatable method in my Elliott wave analysis. And so on a chart like this, the first thing I do is look for an impulsive wave. And I see one here. It started early 15. This is, again, American Express. And it went pretty much straight down until the beginning of this year in a pretty dramatic fashion, from $95 down to about $50. That's an impulsive wave, and I can see the confirmation of the momentum of that wave here on this oscillator down on the bottom. After I see an impulsive wave, I look for a corrective wave back up. So in Elliott wave terms, that's a wave 3, and a corrective wave back up is a wave 4. And wave 4s, or corrective waves, are expected to retrace into a Fibonacci retracement zone of 38.2 to 61.8%. And that zone is defined here by these two blue lines. And you can see this wave retraced right to that zone. So that qualifies. That qualifies. It's ideal if they make it into the center, but this is okay. So we had an impulsive move, a corrective move, and now what we're expecting is another impulsive move in the overall trend direction, which is down. And so I look for evidence that that next move down, that corrective wave, or that next impulsive wave, is beginning. And what I look for in terms of evidence that it's beginning, and I'll expand this just a little bit, is I use the Ichimoku cloud, and I want to see that the price is broken down through the cloud and is now under it, and that the trend has changed out here on the right-hand side of the cloud. And I use Dow theory. Dow theory tells me that a trend has changed when we have a lower low, lower high, lower low, lower high sequence. And we absolutely have that here on this chart. And then I use Fibonacci extension lines. So over here I used retracements to measure the corrective wave, And now I'm using extensions to measure this next impulsive wave. And these extension lines are from here down to here, and it defines a zone between these two green lines. This is the price target zone down here. And for American Express, the price target zone is 39.44 to 22.34. So when we've got, in this case, we've got 4 waves. We had a wave 1, 2, 3, 4 that have met the criteria, that have fallen into a known pattern. And we have that. There's a pretty high probability that then the 5th wave, the next wave in the sequence, is going to fall into this pattern. And so there's a really high probability that it's going down into this price target zone. And so for every trade that I take, I establish an entry price, and I mark it with this light blue line here. I establish a stop price, which is determined by the last resistance level. Remember, I said price moves in a downtrend according to Dow theory, in lower lows, lower highs, lower lows, lower highs. And so this was the last meaningful high right here. So my stop is above that. And so this trend, if it continues, should stay below that high. So I put a stop there, and then I have a target. So every trade I take has an entry price, a stop price, and a target price. And I look for trades that have a really high reward to risk ratio, meaning that the distance from my entry down to the target is much greater than the distance from my entry to the stop. So if I do get stopped out, I'm going to lose a lot less money than I'm going to make if it makes it. Because, you know, not every trade wins, right? Some trades lose. And so as long as I maintain a good win ratio and that my winners are bigger than my losers, I'm going to be profitable. And I am. And I'm going to show you my results here in just a minute. I teach that we use this distance between the entry and the stop to determine our position size. I use a risk management rule that I'm only willing to lose 2% of my account on any given trade. So I simply take the 2% of my account, and to use easy math, let's say it's a $100,000 account, then 2% of that account is $2,000. So I take the difference between the stop and the entry. That gives me my potential loss per share, and I divide it into $2,000, and that tells me how many shares to go short. That way, if the trade fails and it hits the stop, the most I'm going to lose is 2% on my trade. And again, I look for a high reward to risk ratio so that there's a potential for the trade to make a lot more if it wins than to lose if it loses. So it's pretty simple math, and I try to make that really easy. On my website, I provide tools. So let's look at the current price. AXP closed today at 60.86. So here's how I publish it on my website for you, for subscribers. So if you're a subscriber, you log in, and there's a stock pick subscriber area, and I say, hey, I got new trades this week, and this is one of them, American Express. This is a wave 5 short trade, and then there's a web page with the details of every trade. And I say, hey, this is American Express, it's wave 5 short trade. So subscribers can trade this either by buying or selling the shares directly, or with option contracts. I like to trade with options, but I present it in both ways so that you as a subscriber can choose. You can decide which way you want to do it, whatever you work for. But for the option contract, then I give the contract details. January of 2017 expiration, it's the 67.50 strike, and the premium that I'm willing to pay. So here's a calculator that I've got embedded on the website. And again, every pick that I publish has this on there. And I got the symbol, the company name, and here's the recommended sell price range, since this is short, the stop loss price, the price target, and then this is a tool that you can use. So if we flip back to that chart, we say the actual price today is 60.86. So you can type that price in, 60.86, and you can see, you can put in your account size, whatever it is, and say it's $50,000. Now, this calculator is telling you, if you want to follow my risk management rules of 2%, it's saying go short 253 shares that's going to cost you $15,397. Okay. If we hit our target, the profit's going to be $51,421. If it fails and we hit our stop, we're going to lose $996, or $1,000. We round down. So using my risk management method, you can see that the reward to risk on this is 5.44. We have the potential to make 5.44 times more than we would lose if the trade fails. And so I like those kind of reward to risk ratios. So this is the information I publish. And then as we go through the trade, I'll start entering a trade history and I'll send updates. So we just got into this trade, American Express. And again, I'm giving you this pick here just for attending the webinar. So I think American Express is a good short trade. I think a price between 61.47 and 58 is a good short price to get in. The higher the better. Stop loss at 64.80. The price target's at 39.43. Okay, and you can get in later. Say you want to wait and make sure the trend's going. If you want to get in at 58, you just type that price in here and see how that works out. And the risk to reward on it's still not bad, 2.73, not as good now. But if you're a subscriber, again, you can use these tools that I provide. And even if you miss the trade or you want to wait, or even go in outside of my recommended range, you can still decide if the reward to risk ratio makes sense for you. So that's tools that I provide. And throughout the life of the trade, I'm going to be providing updates. I like to take profit as we get into a trade. So I'll show you one that we've closed. We just closed today. Here's WMB, Williams. So this was a long trade that we took. And so we got into this blue line at 22.25, and then we took profit at a couple of these reversal points here. And I had trailed my stop up, so I send those updates. I go, hey, I'm moving my stop. My initial stop was down here, and I moved it to here, to here, to here. And throughout the life of this trade, I give you updates and tell you where I'm moving my stop to and where I'm taking profits at. And so if we look at WMB on the website, just go here and find WMB right there. Okay, I give the history. Hey, we went long at this price. We moved our stop. We scaled out, took profit. We scaled out, took profit. Moved our stop, and then today we hit the stop. So I stay with the trend for as long as it's going to last, and I let the market stop us out. And so we just closed that trade today, and here's the result for it. Bring this over onto this screen here. So we made a 20% profit in a $100,000 account. That was $2,069 on WMB, and we were in at 78 days. So that's typical. I'm in trades an average of 4 to 6 weeks. Okay, you can see I've taken 52 trades year to date. We've won 28, we've lost 24. So it's been a tough year, but still, because of my risk management, because of taking high reward to risk trades, right, I've won 54% of the trades, but my payout ratio, the ratio of the amount I've won to the amount I've lost, is 2.1. So I'm winning twice as much as I'm losing. And so my profit year to date on closed trades is 24% in the total portfolio, or in a $100,000 account. That's $24,000 in profit that we've got year to date. And then that's closed trades. So I've also got a number of trades that are open right now. I've got how many trades open? 8 trades open, and if I were to close them this instant, I would have another $8,000 in profit, which would take my year-to-date profit up to about $32,000. So a lot of these are in good shape. I did just get into that one that I showed you, American Express. We got into this today. First day we're in, and the market moved down pretty sharply today. The S&P was down over 200. AXP went down. So we're already in profit on this trade. We put it on this morning, and we already got almost $400 in profit on the shares. and about $400 profit on the option contract. So I track it both ways so that whichever way you choose to trade it, you can see the results there. So again, I provide updates, and every week, midweek I'll send an update and say, hey, we're going to move the stop on this trade. We're going to take some profit. Here's another trade that we closed last week that was just great. This was a long trade on a biotech stock. This is a Clovis. It's a Clovis Oncology, symbol CLVS. We got long on this at 1742. We took profit twice, once here and then once here, and we trailed our stop up the whole time. And then as it started correcting from this big impulsive move, we ended up getting stopped out. We made, how much on this one? Clovis, we made a 55% profit, or a $4,698 profit on that trade in a $100,000 account. We were in that one 60 days, so just a month and a half. So that was a really, really nice trade. So that's really how the pick service works. I scan, I spend several hours each week scanning through different sectors, through the markets, finding the absolute best trades. And these are trades that I'm taking in my own account with my own money. So I'm, that's how I started, was becoming a successful trader, and then people asked me about my trades, and ultimately it morphed into, providing this service and providing education as well for other traders. And so you can be sure I'm only publishing picks that I think have great potential and high probability, because I'm in them with my money. So that's really how it works. I scan, I find good picks, I publish 1 to 2 picks per week. I provide updates throughout the life of the trade as we're going to take profit on them, and then ultimately as we're going to get out of the trade, close it, and move on to new ones. I also run I have a chat session, so midweek, every Wednesday, once in the morning, once at night, for people on different schedules. I have a chat session just like this, where I log in and we go through all of the new and open trades and review what's going on. I do some education if you're interested, if you have questions. And so you're just able to be fully engaged and understand what I'm doing and follow along. So that's really what I was hoping to accomplish tonight, was just to explain how the service works and really to answer any questions that you have. So if any of you attending, we got a handful of folks here, and if you got questions about the trades, about the service, about how it works, about how I pick trades, how I analyze charts, anything like that, I'm here to answer your questions. And again, that pick that I've got for you is American Express. So I think that's a great one. I'm also short. I'll give you a bonus. I'll give you another one. So I'm short Walmart too. We got short this last week, and we got short at this light blue line here at 71.78, and we're in good shape here. We're already really, really in nice profit on Walmart. You can see here Walmart on the shares, we're at 6% profit, $5,000 profit on this trade. So far, we got a long way to go. So there's still good entries, and remember, we can look at this. So what's the current price? $67.39. So on the website, if you go, well, should I still get into Walmart? Does it still make sense? Here on the website, you can go to the Walmart page and just type in the current price, $67.39. And it says, hey, the risk to reward on this at that price is still 2.39, so that's still pretty good, right? That's still a pretty good reward to risk ratio. So you can answer that question. Yeah, it looks like it's still pretty good. Still pretty good trade to get in, and this downtrend is really getting underway, and it's got a long way to go. So that's the deal. So Tamar said, join late, how much? So the list price for my stock pick service is $127 a month. That's what's listed on the homepage here. If you click on this weekly stock picks, it's $127 a month. I'm offering, folks who attend here a discount. You can get it for $97 a month, so it's a 25% discount, and you can try it for 10 days for $10 or $7. $7. You can try it for 10 days. So I'll give you a link here. You know, give it a pick for 10 days. Give it a trial for 10 days. You know, really get a feel for it. Come to a couple of our weekly chat sessions. Look at some of the picks, and then decide if it's good for you. It's not for everybody. Most people who subscribe, man, they stay. They like it because we're making good money. Right? We're making profit on the trades. But try it for 10 days, and if it's not your thing, you know, I'll give you a full refund of your $7. No questions asked, no hard feelings. If you want to stay on day 11, it's going to auto renew at $97 for the upcoming month, and that's a month-to-month subscription. You can cancel at any time. So that's the deal. That's how it works. I posted that link if you're interested in taking that trial and giving it a shot. It's in that chat area there. So I invite you to give it a try if you're interested. All right. Well, if you got questions, any other questions, this would be a good time. Okay. Tamar says, loved the futures room. He'll join again after December. All right. Well, we'll be here. We may be raising the prices at the end of the year. So, you know, it'll be fair. It'll be a good deal. But if you wanted to get in at this current price, this discount of $97 a month, you might want to consider getting in now. Later this year, we'll be offering some annual subscription deals too. We do that at the end of each year. But, you know, your choice. Hey, thank you. Thank you very much for attending, all of you. I appreciate it. And if you think of something later, feel free to send me an email. It's dean@followmetrades.com. I answer every question I get. So take care, and we will catch you later. Thanks.